What happens to crypto when the world starts getting unstable? Over the past few days, rising tensions and war developments have sent shockwaves across global markets, and crypto is right in the middle of it. Bitcoin volatility is back, altcoins are reacting fast, and investors are asking one big question: is crypto a safe haven or just another risk asset? Welcome back to FinanCryp. Today we're breaking down exactly how this war is affecting the crypto market right now, what we've seen over the past few days, and what it could mean going forward. Let's start with what just happened. Over the last few days, news of military escalation created immediate uncertainty across global markets. As soon as that uncertainty hit, we saw reactions everywhere. Stocks started pulling back, oil prices jumped, and traditional investors began moving cautiously. Crypto followed almost instantly. Bitcoin started showing sharp movements within hours of major news updates. Not just one direction either. We saw sudden drops followed by quick recoveries. That tells us something very important. Crypto is extremely reactive to global events, especially during times of conflict. Now the big question is why? Why does war affect crypto so much? There are a few key reasons behind this. The first one is what investors call risk-off behavior. When fear enters the market, people move away from anything considered risky. And despite all the talk about crypto being the future of money, the reality is that most investors still treat it as a high-risk asset, especially altcoins. So when uncertainty increases, many investors start selling their crypto positions to protect their capital. The second reason is liquidity shifts. Large investors, institutions, and whales don't sit still during moments like this. They move money fast. In times of global tension, they often shift capital into safer assets like cash, gold, or government-backed instruments. When that happens, liquidity leaves the crypto market, even temporarily, and that creates sudden price drops and volatility. The third reason is global uncertainty itself. War introduces unpredictable outcomes. We're talking about economic sanctions, currency instability, disrupted trade routes, and even banking limitations in certain regions. All of this creates pressure across financial systems, and crypto, being one of the fastest-moving markets, reacts immediately. But here's where things get interesting. Even though crypto drops during fear, not all crypto behaves the same way. Bitcoin, in particular, has been showing a different kind of behavior compared to the rest of the market. Some investors see Bitcoin as digital gold, and in certain moments, it actually starts acting like one. Over the past few days, while many altcoins were dropping hard, Bitcoin showed signs of holding stronger support levels. Why does this happen? Because in regions affected by war or economic instability, people start looking for alternatives to traditional financial systems. If banks become unreliable, if currencies lose value, or if governments restrict access to money, people turn to decentralized options. Bitcoin allows individuals to store value and move money without relying on banks. That's powerful during times of crisis. So what we're seeing right now is a split in the market. Bitcoin is starting to behave like a semi-safe haven, while altcoins are still treated as high-risk assets. And that brings us to altcoins, because this is where the biggest impact is happening. Over the past few days, altcoins have taken the hardest hit. Many of them dropped faster and more aggressively than Bitcoin. Meme coins and low-cap projects saw even heavier sell-offs. That's because when fear enters the market, investors don't want speculation. They want safety, so they exit the riskiest assets first. That leads to lower trading volume, more panic selling, and bigger price swings. If you're holding altcoins right now, this kind of volatility is expected. Another important factor to consider is government action. During times of war, governments increase control over financial systems. This can include stricter monitoring, restrictions on money movement, and sanctions on certain countries or institutions. While that might sound like a negative for markets overall, it actually creates an interesting situation for crypto. In past conflicts, we've seen crypto usage increase in regions facing restrictions. People use it to send and receive money when traditional systems are limited. We've seen donations being made through blockchain, individuals protecting their wealth from collapsing currencies, and businesses finding alternative ways to operate financially. So while short-term market reactions might be negative, long-term adoption of crypto can actually increase during times like this. So now the real question becomes, is this a danger or an opportunity? The answer is both. On the danger side, we have high volatility, sudden price drops, and emotional decision-making. Many traders panic during times like this, selling at the wrong time and locking in losses. On the opportunity side, we have discounted prices, chances to accumulate strong assets like Bitcoin and Ethereum, and positioning for future recovery when stability returns. The key difference between losing and winning in moments like this often comes down to mindset. Smart investors don't panic. They don't react emotionally to every headline. They observe the market, understand what's happening, and make calculated decisions. Because here's the truth, war creates uncertainty, and uncertainty creates volatility. Crypto is not immune to that. In fact, it reacts faster than almost any other market. In the short term, we can expect sharp movements and unpredictable swings to continue as long as the situation remains unstable. But in the long term, these events often accelerate adoption, strengthen the case for decentralized finance, and bring more attention to crypto as an alternative system. So the real question isn't just what the market is doing right now. The real question is how you position yourself during times like this. Are you reacting, or are you thinking ahead? That's it for today. If you found this valuable, stay tuned for more breakdowns here on FinanCryp. And let me know in the comments, do you see crypto as a safe haven, or do you still see it as a risky asset?